Hey there, Iguana Gang. It's your boy Iggy here, and boy, do I have a treat for you today. We're diving deep into the world of ST Engineering, a company that's been making some serious waves in the tech and engineering scene. Now, I know what you're thinking. Iggy, engineering. That sounds about as exciting as watching paint dry. But trust me, this isn't your average nuts and bolts story. We're talking about a company that's at the forefront of aerospace, smart city tech, and defense systems. It's like the Tony Stark of the business world, minus the Iron Man suit, as far as we know. In this video, I'm going to break down why ST Engineering is catching the eye of top analysts, what's driving their success, and why it might just be the next big thing in your investment portfolio. We'll look at their latest moves, crunch some numbers, and even peek into the crystal ball to see what the future might hold for this Singapore-based powerhouse. So buckle up, Iguana Gang, because we're about to take off on a journey through the world of high-tech engineering and savvy investing. Let's get this show on the road. Now let's start with the basics. ST Engineering is like the Swiss Army knife of the tech world. They're not just dabbling in one area. They're spread across aerospace, smart city tech, and defense systems. Imagine a company that can fix planes, design traffic systems, and build military gear all at the same time. That's ST Engineering for you. They're the ultimate multitaskers of the corporate world. But here's where it gets really interesting. The big brains on Wall Street, we're talking about 6 different analysts, are all giving ST Engineering a big thumbs up. They're saying it's a strong buy. That's like getting straight A's on your report card, but for stocks. It's not just 1 or 2 analysts either. We're talking about a unanimous vote of confidence here. Let's break down the numbers, shall we? As of our latest check, ST Engineering stock is trading at about S448. But these analysts think it could go up to S4.60s in the next year. That's a nearly 5% increase. Now, 5% might not sound like much, but in the stock market, that's a pretty solid gain. It's like finding an extra fry at the bottom of your McDonald's bag. Small, but oh so satisfying. Here's a fun way to think about it. Imagine you have $100. If you put it in a savings account, you might get 1% interest if you're lucky. But if these analysts are right about ST Engineering, your $100 could turn into $105 in a year. It's not going to make you a millionaire overnight, but it's a lot better than letting your money sit around doing nothing. But wait, there's more. Some analysts are even more optimistic. The most bullish prediction is saying the stock could go up to $491. That's like your teacher giving you extra credit on top of your AX. It's the cherry on top of an already sweet sundae. Now you might be wondering, Iggy, why are these analysts so excited about ST Engineering? Well, let me break it down for you. 1. Diverse business. ST Engineering isn't putting all its eggs in one basket. They're involved in different industries, which means they're not relying on just one thing to make money. It's like having a lemonade stand, a car wash, and a dog walking service all at once. If one business slows down, the others can pick up the slack. 2. Strong order books. ST Engineering has been racking up some impressive contracts lately. In the second quarter of 2024 alone, they clinched a $100 million contract for NATO standard 150mm artillery ammunition. That's a lot of bang for their buck, literally. 3. Growing industries. The areas ST Engineering works in, like aerospace and smart city tech, are expected to grow a lot in the coming years. It's like they've set up shop in a neighborhood that's about to become the next big thing. 4. Innovative partnerships. ST Engineering isn't afraid to team up with other big players. They recently deepened their support for Safran aircraft engines, working on high-tech engine parts for LEAP 1A and LEAP 1B engines. This partnership is set to address the growing demand for engine maintenance as more planes take to the skies. 5. Community involvement. It's not all about profits for ST Engineering. They recently raised $550,000 for the President's Challenge 2024 by getting their employees to walk, run, and cycle a total of 600,000 km. Talk about a company that knows how to give back. But hold up, Iguana Gang. Before you go rushing to buy ST Engineering stock, remember that investing always comes with risks. Even the smartest analysts can sometimes get it wrong. Here are a few things to keep in mind. 1. Economic slowdown. If the global economy hits a rough patch, it could mean fewer orders for ST Engineering's products and services. 2. Labor costs. Like many companies, ST Engineering has to deal with rising wages. This could eat into their profits if they're not careful. 3. Competition. The tech world moves fast. ST Engineering needs to stay on its toes to keep up with new competitors and technologies. 4. Geopolitical risks. Given their involvement in defense systems, any changes in global political landscapes could impact their business. So, what's the bottom line? ST Engineering looks like a solid bet according to the experts. But remember, in the stock market, there are no guarantees. It's always important to do your own research and think about how a stock fits into your overall investment strategy. Here's my advice. If you're interested in ST Engineering, start by learning more about the company. Check out their latest financial reports. They're set to release their first half-year results for 2024 on August 14th, so mark your calendars for that. See what they're working on, and most importantly, think about whether you believe in their long-term potential. Remember, investing is a marathon, not a sprint. It's about building wealth over time, not getting rich quick. And hey, even if you're not ready to invest yet, learning about companies like ST Engineering can help you understand how businesses work and what makes a company valuable. Before we wrap up, let's take a quick look at what the future might hold for ST Engineering. Analysts are expecting their revenue to grow by a 3-year CAGR of 6.4% from 2024 to 2026. That's some pretty steady growth right there. They're also expanding their capabilities, with plans to offer full MRO services for both LEAP-1A and LEAP-1B engines soon. It's clear that ST Engineering is positioning itself for a future where air travel and smart city technologies are going to be more important than ever. So there you have it, Iguana Gang. We've taken a deep dive into ST Engineering, from their diverse business model to their latest partnerships and community initiatives. We've looked at why analysts are bullish on the stock and what risks to keep an eye on. Remember, investing is all about making informed decisions, and I hope this video has given you some food for thought. If you found this breakdown helpful, don't forget to smash that like button and subscribe to the Investing Iguana channel. Your support helps me keep bringing you these in-depth looks at the Singapore stock market and beyond. And hey, drop a comment below letting me know what stock you want me to cover next. Is there a company you've been curious about? Let me know, and I'll put my detective hat on. Also, if you're hungry for more investing knowledge, check out some of my other videos. We've covered everything from REITs to tech stocks, always with that iguana flair you've come to know and love. Remember, whether you decide to invest in ST Engineering or not, the most important thing is to keep learning, stay curious, and always do your own research. Until next time, this is Iggy, your friendly neighborhood investing iguana, signing off. Stay smart, stay curious, and keep growing that money tree.